Welcome back everyone to the channel. Today we are going to take a deep and detailed look at Applied Digital Corporation, its current market performance, financial condition, recent developments, stock volatility, analyst expectations, major business agreements, and what the overall market appears to be signaling. This is a complete overview designed to help you better understand the company's position and recent movements in a clear and structured way. This content is for informational and educational purposes only and should not be considered financial, investment, or legal advice. I am not a financial advisor, and nothing in this video should be interpreted as a recommendation to buy, sell, or hold any securities. All investments involve risk, including the possible loss of principal. Stock prices are volatile and may fluctuate significantly due to market conditions, company performance, economic factors, and other risks. Applied Digital Corporation currently holds a market capitalization of $8.57 billion. Over the past week, the company's market value has decreased by 13.47%, reflecting short-term pressure in the stock price. At the moment, APLD is trading at 29.08 US per share, representing a 5.15% decline in the last 24 hours. Depending on the exchange, the stock ticker may vary, but on the NASDAQ exchange, Applied Digital Corporation trades under the ticker symbol APLD. When we examine the short-term performance, the stock has fallen 7.15% compared to the previous week, and over the past month, it has experienced a significant decline of 24.76%. However, looking at the bigger picture over the last year, Applied Digital Corporation has delivered a remarkable 234.83% increase in its stock price, demonstrating strong long-term growth despite short-term fluctuations. From an analyst perspective, future price expectations for APLD vary considerably. Analysts have set a maximum price target of 102 US and a minimum estimate of 36 US. These projections indicate a wide range of possible outcomes, reflecting both the growth potential and the volatility associated with the company. Investors often monitor stock charts and analyst forecasts carefully to better understand potential price direction and sentiment around the company. Historically, Applied Digital reached its all-time high of 112.3 US on August 5, 2003. On the other end of the spectrum, its all-time low was recorded at 0.05999 USD on December 30, 2011. This dramatic range between historical highs and lows highlights the company's long-term volatility and transformation over time. Currently, the stock exhibits volatility of 9.90% and carries a beta coefficient of 2.88, which indicates that it tends to move significantly more than the broader market. A beta above 1 suggests higher sensitivity to market movements, and at 2.88, APLD is considered highly reactive to overall market trends. Looking ahead, the company is scheduled to release its next earnings report on May 8, 2026. Earnings reports are critical events because they provide updated financial performance data and often influence short-term price movements. In the last reported quarter, Applied Digital posted earnings of negative 0.07 US per share, outperforming analyst expectations of negative 0.12 USD per share. This resulted in a positive surprise of 42.54%. For the upcoming quarter, analysts estimate earnings of negative 0.13 USDs per share. While the company is still reporting losses on a per-share basis, outperforming expectations can sometimes improve investor sentiment. Revenue performance has shown notable strength. In the most recent quarter, Applied Digital generated revenue of $126.59 million US, significantly exceeding the estimated $85.34 million USD. For the next quarter, revenue is expected to reach approximately $75.51 million US. Despite strong revenue growth, the company reported a net loss of $17.51 million USDs in the latest quarter, compared to a net loss of $16.93 million USDs in the prior quarter. This indicates that profitability challenges remain, even as revenue expands. EBITDA, which measures operating performance and efficiency, currently stands at negative $38.98 million US, with an EBITDA margin of negative 15.97%. A negative EBITDA and margin reflect ongoing operational losses, but investors often examine whether margins are improving over time as a sign of operational efficiency progress. Growth in EBITDA would typically signal improving cost management and scaling benefits. Technically speaking, current indicators show a short-term sell signal for the stock, while the one-week rating suggests a buy. Expanding the time horizon, the one-month rating also indicates a buy signal. This mixed technical outlook suggests that while short-term momentum may be weak, medium-term indicators show potential strength. Market conditions are dynamic and can change rapidly, which is why many investors combine technical analysis with fundamental research before making decisions. A significant catalyst for the company came with the announcement of Delta Forge 1, a new 430-megawatt AI factory campus planned in a southern U.S. state. The facility is scheduled to begin operations in mid-2027. This development reflects strong demand for Applied Digital's purpose-built artificial intelligence infrastructure. The company has built a history of securing long-term lease agreements for its data centers, which are projected to generate substantial revenue over many years. Following this announcement, several capital market firms reiterated their positive ratings on the stock, indicating confidence in the company's long-term growth strategy. After an initial price surge related to the news, shares later cooled to $38.11, representing a 1% increase from the previous close at that time. Applied Digital's stock is known for its volatility. Over the last year, the shares have recorded 91 price moves greater than 5%. In that context, recent movements suggest that while the market considers the company's developments meaningful, they may not fundamentally alter long-term perceptions of the business. About 10 days prior to one of the notable moves, the stock gained 4.8% following increased investor optimism. This optimism was driven by a strong growth pipeline, a substantial order backlog, and rising demand for artificial intelligence infrastructure. The company reported an order backlog of approximately $16 billion. This includes 2 lease agreements with AI cloud company CoreWeave expected to generate a combined $11 billion, as well as a 15-year agreement valued at $5 billion with another U.S.-based high-performance computing provider. Such long-term agreements provide revenue visibility and strengthen the company's financial outlook. In its fiscal second quarter, revenue surged 250% year-over-year to $126.6 million, reflecting rapid expansion. Broader market trends also contributed positively, as technology and semiconductor-related stocks rallied amid growing confidence in artificial intelligence as a long-term growth driver. Since the beginning of the year, Applied Digital shares have increased 35.5%, and at $38.11 per share, the stock has traded close to its 52-week high of $38.21 recorded in January 2026. Over a longer investment horizon, the returns have been substantial. An investor who purchased $1,000 worth of shares 5 years ago would now see that investment valued at approximately $94,759, illustrating the company's significant long-term appreciation. In terms of corporate developments, Applied Digital signed a contribution and exchange agreement to combine its cloud subsidiary with Ekso Bionics, which will be renamed ChronoScale upon closing. As part of the agreement, Applied Digital will receive 138,260,820 new shares and is expected to hold approximately 97% of the combined company before other transactions. The transaction is subject to shareholder approvals, regulatory clearance including SEC review of an information or proxy statement, a NASDAQ listing application, third-party consents, tail insurance, and PIPE financing determined by Applied Digital. Additionally, an investor rights agreement will grant Applied Digital substantial board designation and governance rights, ensuring strong influence over the combined entity. Insider activity also drew attention when Director Chuck Hastings sold 45,987 shares of common stock on January 29, 2026, at a price of $38.57 per share, totaling $1,773,718. Following the transaction, he continued to directly own 388,372 shares, including 7,747 restricted stock units, scheduled to vest on November 5, 2026. Insider transactions are often monitored by investors as they may provide insight into executive sentiment, although such sales can occur for many personal financial planning reasons. Looking forward, the company plans to continue expanding its data center operations with a focus on high-performance compute hosting to support artificial intelligence, cloud services, and networking workloads. The completion of new data centers is expected to serve as a key driver of future growth. As global demand for AI infrastructure continues to rise, Applied Digital aims to position itself as a major provider of specialized hosting solutions tailored to advanced computing needs. Overall, Applied Digital Corporation presents a combination of high growth potential, strong revenue expansion, substantial long-term contracts, and elevated volatility. The company remains in a loss-making phase but continues to expand aggressively within the rapidly growing AI infrastructure sector. Market signals reflect both optimism and caution, with analysts projecting a wide range of possible price outcomes. As always, comprehensive research, including financial statements, market conditions, and technical indicators, is essential when evaluating any stock. If you found this detailed breakdown helpful, make sure to like the video and subscribe to the channel for more in-depth market analysis and stock insights. Thank you for watching, and I'll see you in the next one.